The big winner in the Dow today was Apple, while Intel was the biggest decliner. Over in the S&P, it was General Electric topping the charts because guess what? GE's not in the Dow anymore. Walgreens is, so GE with a better than 7% gain wouldn't have made much of an impact on the Dow anyway, only would have added 7 points. Bright House Financial, the biggest loser. Michael, what do you make of
Walgreens
this?
down 1% on its debut in the Dow.
Was it?
So, yeah, no figuring that really. Honestly, it was a little bit of a meek bounce, even when it was at the highs. I think it was
barely a bounce at all.
It really, what it was about was the market stopped going down, did not gather up downside momentum yesterday after we had that little gesture by the White House to say, look, don't get too excited about these new trade restrictions that have been reported. But beyond that, I think the market is kind of comfortable, for better or worse, in this general zone. The bank stocks Bob was talking about being weak is a little bit of a psychological
how
overhang.
weak are we talking?
They're down about 5% in this 12-day losing streak.
But that's what's unusual about it. In fact, we've had 12
which is
in
a little
row.
bit of a statistical quirk. I mean, you could have had an up day in
all? Yeah.
But 5%, in 2.5 weeks is also something. And look, the European banks are struggling, as we all know. So it's a lot of factors in there. But it just, I think, in general, aside from a pretty good bounce in the big tech stocks, and of course energy getting a lift, it was kind of a neutral session.
And John, maybe adding to this, questions about how much these trade skirmishes are impacting the U.S. economy. Consumer confidence number this morning, the expectations was the lowest since last year. It was kind of a surprising backstep. People go, wait. We need the consumer to stay strong. GDP is strong this quarter. It's all supposed to be coming up roses. Do you think there's more of an impact there?
Kelly, we don't worry too much about what consumers say. We worry a lot more about how they spend. Home prices yesterday morning were better than expected. I'm sorry, home starts were better than expected yesterday morning. So by all accounts, the consumer is fine. In fact, the economy is fine. Earnings are fine. It's these tariffs. And I feel like the market today was saying, well, we heard the White House kind of dampening down. This is not it's an overreaction. But the market's kind of saying, well, we don't really quite believe you on this tariff stuff, and for us, I really think it's all politics. It's the WTO put out some numbers a couple of weeks back that a lot of people didn't pay any attention to, but I'll just call attention to one of them. Trade going to Europe from the U.S. Average tariff paid on a weighted basis is 1.6%. Trade coming to the U.S. from Europe 1.4%. The difference is rounds off to zero. This is all politics.
So how does that leave you on the markets then? Do you buy the names everyone's selling because of the trade issues like Boeing, like Caterpillar and the likes?
Well, they're pretty scary, these issues. I mean, you keep putting up barriers for business to do business. Business is going to be less. And the only reason that we don't get too concerned is because the earnings are so darn good. To quote Mae West, who once said, too much of a good thing is always a good thing. So the earnings are expected to be now up 20% in the second quarter, after 25% in the first quarter. And so, that's kept us interested, and I'm sure many other investors.
Well, we also had the oil price surging today. It was closed higher by more than 3.5%. The State Department said oil buyers must completely cut off purchases of Iranian supplies in early November. Mark Harris, how much of an impact is this going to have across the U.S. economy?
I frankly, at this point, it's not something that's a major concern to us. We think that the supply is going to come on the market. We think we're going to be okay. But at the end of the day, I agree with the gentleman who's speaking prior. There's a lot more jawboning going on right now than there is actual real action to the economy. The underlying numbers are still way too strong for us to be getting massively concerned. Probably the only thing that begins to worry me is the idea of the yield curve beginning to invert a little bit, and maybe some signals that at some point we as cycles tend to be, you got to be looking forward to a recession. But there's nothing saying to us right now there's anything even close to that at the moment. But it's on people's minds. And by the way, I wouldn't discount the trade stuff either. That was real. These market was selling off the past couple of days because people were genuinely concerned about the jawboning. Maybe we're backing off now, but that was some real stuff. And the jawboning at some point becomes real. And I think that's the thing we've got to be watching right now.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.